Hello and welcome. We all have heard the Finance Minister and Budget 2026, and now it is really time to decode all of those announcements. Is it really the glass half full or the glass half empty? Have we met all the expectations that we all have discussed throughout the past few weeks and months? Or is there room for more? This, of course, was a challenging time for the budget, as we all know, given the geopolitical uncertainty. And also remember, we have been tracking the markets and the markets' reaction to the budget announcements, which has, of course, been in the red. We have seen the markets react in the red. And before we sort of decode the market reaction, I will introduce all of you. I have Mitali Nikor and Sansita Mukherjee. Thank you both for your time. Both economists there, and Ajay Bagga, senior market expert, Jaideep Kevalramani from Team Lee's Tech, also tracking, a lot of the tech and AI announcements and skilling and training announcements for us. So thank you all for your time. Mitali, first to you. Do you think that the budget today has addressed all those top five expectations that we have been discussing? Remember, we discussed the defense and infra boost, MSME support, artificial intelligence, even. So, do you think it's in line with all those expectations that were then coming in?
Thanks, Sakshi. So I think, honestly, the one big theme that we had also discussed, and that was one of the expectations that I had, was around economic security, because we are dealing with increasingly uncertain times. There's a lot of geopolitical stress that, India as a country is currently navigating in global markets. So what is it that we expected? We really expected a defense boost. We did get that. We are seeing that the defense budget was increased to 6 lakh crores this year, which is actually a 20% increase from last year. So there has been an increase in the defense budget, and a pretty significant one at that. The second area that we expected would be prioritized would be, value chains and support across the value chain. And that is again something that we saw in several sectors being announced. When we look at the semiconductor mission that was announced, when we look at the electronics components missions, when we look at the rare earth corridors that were announced, and also the textile parks, and then of course combining with that the logistics sector announcements, particularly the domestic manufacturing of containers, which really actually puts us at a point where we can actually start manufacturing domestically on containers. So this entire Atmanirbharta and linking with value chains of favorable countries was the second thing we expected, and we got that. And the third area that we really expected, which I think we didn't fully get, was on renewable energy. I really thought that we'd see much more on oil market diversification. We'd see a lot more on energy diversification. I don't think we saw enough of that. There was a small increase in the MNRE budget, the budget of the Renewable Energy Ministry, but I really expected that there might have been a more umbrella scheme announced for that. That we didn't see.
So that we didn't see. So some hits and some misses there, as you've just explained. Sanchita, to your mind, really, what is the big hit then for this budget, and that you've seen in this budget announcement there from the finance minister, and the one big miss or the one area in which you thought that we could have emphasized a little more?
I'll just thank you so much for having me, Sakshi. I'll quickly start with a quote I read somewhere on our national animal, the tiger, and in this case, tigress. So when the tiger lies low, it does not necessarily lie low because out of fear. It lies low because it's focusing on its aim, right? So similarly, this is a very challenging environment within which this budget was presented, given the entire geopolitical upheaval, the heightened sense of volatility and all of that. No, we cannot, as a country, afford to jeopardize our macroeconomic parameters. I mean, we have always had a very wonderful run when it came to fiscal consolidation, keeping our deficits in check and everything. Bank balance sheets are pristine right now. So I think, given all of that, we're doing a middle kind of a walk, that where do we take the leap for growth while not ruining our macroeconomic parameters. In that aspect, I think that one big hit, I would just deep dive and make it into 5 subcategories, which I felt were quite marvelous. I mean, it's a very responsibly structured budget poised for growth. 5 things: infrastructure, definitely, there was a big push. CapEx increased to 9%. There were announcements of 9 rail corridors, waterways, all of that. Second, from the infrastructure would be the futuristic investments in futuristic industries, which was eye-opening. Things like Bharat Vistar, which is an AI multilingual platform helping farmers scale up their productivity, their risk management, all of that. Wonderful announcement. Then giving the whole impetus on cloud-based services, giving them a tax holiday, data centers till 2047. Huge impetus to IT, because IT in today's date needs to be a very competitive industry in the unfolding geopolitics scenario. So categorizing KPO, contract-led R&D, IT-enabled services, all under the head of information technology services, bringing them to the safe harbor umbrella was a big push, I think. And there was a definition change of mid-tier IT, which could claim the safe harbor, which is 2,000 crore to 1,000 crore. That's been increased, which is a big boom to information technology, if you ask me. Thirdly, the impetus on women. I mean, Shima, so women are given this opportunity to move from credit-based livelihoods to actually becoming business owners. Girls hostels in every district. So definitely a lot of focus. Very happy to note, being a woman myself, that a lot of impetus given to women. Fourth would be the youth. Tremendous focus on youth, on education, building 5 townships of universities, Khelo mission, identifying sports, coaches, development, gaming, tech animation, all of that. So a lot of things which is directly aiming and focused towards youth development, skilling, education to employment, that whole scheme. Here in the industry, we are quite aware that there is a demand, but there's no skilling. So that how do we plug this gap? So this, I think, was well thought through. And last but not the least, I come from the financial services industry. I think the announcement of the financial services reforms, how we will be looking at public sector banks, the lending, NBFCs, and of course, allowing foreign people residing out of India to participate in the capital markets, that increase which has happened. These are all good reforms which are coming into phrase. So these are the big hits. And the one big miss, I think, which the capital markets are a little, understandably, a little annoyed over, would be the fact that, I think the markets were expecting a rationalization of the long-term capital gains tax. That has not come down, and however, the STT has gone up on F&O. But I think that's essentially to safeguard ourselves again in a speculative bubble. A lot of developed economies have that going on. So that's where I stand at.
Okay, so those are your big hits and big misses. Ajay Bagga, how do you rate Budget 2026? Did it meet all expectations, or is there room for more? The market's clearly giving it a thumbs down. Markets were earlier plunging, then recovering some of those losses, and then we still see them trading in the red. So your first thoughts really on why the markets have reacted the way they have. To those wondering, okay, what's in the budget for me then? What would you say? Because many believe that, look, there are structural changes, but what's then, in this budget for me? Your answer to all of those then?
Yeah, see, expectations were very low going into the budget because personal tax cuts had happened last year, GST had happened in September, RBI had cut rates. So we didn't really see much in the government's arsenal. And they have tied up themselves to a fiscal conservatism, a glide path to reduce debt and the fiscal deficit. Given that nominal growth was low, we were looking at something for consumption. If you ask me, the biggest disappointment is on the consumption side, and we have two eminently qualified economists here. They can talk more on that, but I would say this is still continuing the 6-year-old infrastructure build-out focus, which is good, but you needed something on consumption, which was missing. On the capital markets, STT and all, okay, we'll get used to it. It will have an impact. Back of the envelope, 15 to 20% volumes go down. More the high frequency guys will get impacted. So we are not very worried. We prefer if the investors come in the cash equity side rather than gambling on the F&O. So that way it was methodical. the data center, the cloud services, 2047 tax break, gift city. Madam Finance Minister didn't mention, but the gift city tax break has been doubled to 20 years, and then even after 20 years, the tax will be 15%. I think it's it's something quite important. Rest, Sanchita, Mitali, both of you have covered all the points. So I would say pragmatic budget, forward-looking, long-term oriented, missed opportunity on the consumption side. That is the crying need. And when we were turning this year, I was saying there are three catalysts which will lead to an Indian market recovery. One is earnings growth coming back. That is still maybe a couple of quarters away, but we are seeing incipient green shoots. Second was a Trump trade deal, which again might be 3 months to 6 months away, some progress happening. And third was a strong union budget, which gives us some stimulus into the economy. So the stimulus stays, but it could have been targeted more on consumption. We could have taken a breather from the infrastructure build out for this year. It said, this year I'm putting 2 lakh crores in XYZ to help consumption along. That boom would have been much faster, because we are seeing infrastructure is becoming more and more a lot of stalled projects, a lot of projects which are not yielding results. So they're again 3 to 4 years ahead in the future. It is needed, but maybe this year could have been focused on consumption. That's all.
Right, so that's really your big hit and your big miss. Jaideep Keval Ramani, do you agree with all of them? And your thoughts really on the budget and the focus really that healthcare, skilling, training have also seen in this budget, the announcements mentioned there. For all of this, of course, including AI and tech going forward.
Of course, Sakshi, thank you so much for having me here. So you asked for 5 hits, I'll give you 6. One must view this budget in the context of, if COVID led us to China plus one strategy, the tariff wars have led us to the US plus one strategy and the entire Viksit Bharat dream. I mean, overall, this budget was very balanced. I think everything was linked to creating jobs in the knowledge economy. The 6 big things that will lead to that: one is the focus on AI in governance and the infrastructure around the semiconductors, and I mean, it all leads to that. The second is the university industry cluster that Sanchita also spoke about, and more importantly, the E to E to E, the education to employment to enterprise initiative. I mean, the campus to corporate transition is extremely important. That leads to the whole industry academia interaction. The skill and the healthcare and the tourism, this thing, the partnership of tourism with IIMs is a brilliant move, because India has a lot of tourism economy around temple economies and heritage and all of that. And a trained talent pool to meet international tourists is going to definitely create a GDP impact over there. Again, that Bagaji said, the data and the cloud infrastructure, the tax holiday till 2047. I mean, that's a brilliant move. I mean, takes away a lot of future speculation as to what will happen to investments and FDI and all. I mean, that's brilliant. One thing that everyone overlooked was the space economy. One must understand that if you have to develop our indigenous space economy, we need investments in astrophysics and astronomy, which was kind of little muted, but at least it got a mention in the budget. I mean, never before has this been mentioned. And of course, the content creation labs in high schools. I mean, this gives a strong signal that the future of content is very, very different. And for the government to think that this should be seeded in the high school is sending a different signal in terms of what is the skill set and the talent that we required for the entire content economy. The big miss was that we need a population scale initiative in artificial intelligence, and that has to start with integrating AI in higher education, and that was missing. Of course, like we always say, employability is key, and that only comes through work integrated programs. So that also was found a little lacking.
All right. Well, thank you so much, all of you, for sharing your initial thoughts and, of course, trying to decode Budget 2026. Of course, a lot really to decode there. And we will see how implementation on the ground really pans out. But thank you so much for sharing your thoughts. Thank you.